Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500, as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today. So today's chart is the Nasdaq 100 index. And my point of bringing this chart up today is to focus on bearish divergences. You see, the Nasdaq 100 chart doesn't just show you the Nasdaq 100. In this point, it actually reflects the patterns that I'm seeing in a lot of technology shares, a lot of communication services, big consumer names, all of these different stocks and all these different sectors, all apparently establishing what I would call a bearish divergence. What a bearish divergence is when you have higher highs in price and lower peaks in momentum, in this case, the form of RSI. So if you look at January to February of 2020, a lot of stocks, as well as the Nasdaq 100, saw this similar pattern. We saw higher highs, a January high, and then a February high that went even higher, established a higher high in price. But then if you look at the RSI, the oscillator, the momentum indicator, lower peaks in RSI. So a lower peak on the second peak in price. So higher highs in price, lower highs in the RSI. Now, there are a number of ways to use this sort of technique. The most aggressive way is to see the divergence and to take action on it. The more conservative way is to wait for some sort of breakdown. So what I found is, look for a breakdown of the swing low between the two peaks. So in this case, back in January, it was the low around 8,900, which is the low from the last week in January. We broke that the last week in February. That confirmed the bearish divergence, confirmed the downside. If you look, what I'm seeing right now is a very similar pattern, although a little shorter time frame by about a week, but overall it's a similar pattern of higher highs in price, lower peaks in RSI. And again, this is the Nasdaq 100. The Qs obviously based on the Nasdaq 100 showing almost an identical pattern, but Microsoft, Apple, a lot of semiconductor stocks, a lot of big consumer names, big mega cap names are all showing a similar type of pattern. One problem a lot of people get into is they start to identify divergences before they occur. And I think the end of December, beginning of January last year is one of those traps people fell into. If you look here, the last 2 weeks in December going into January, you saw price continuing higher and you see the RSI sort of going down. But what happens is until you get some sort of, if the price keeps going higher, if the price keeps making higher highs and higher lows, the divergence will actually work itself out and it will actually continue higher. So what happened is soon after the RSI actually continued to go up, it eliminated that divergence because there was no longer lower peaks in the RSI. There was a higher peak and we continued even further. In this case, you had the RSI become extremely overbought, or an RSI reading above 80, which usually means a brief pullback and then at least one more final push higher. So the way that I would read the current market, looking at all of these divergences, is it's now on the watch list. This now puts it on the list of potential negative movements, and it tells me to expect at the very best limited upside, at the worst a material downside move from here. The way you qualify or confirm that there's some weaknesses, again, you have to look for some sort of breakdown, which means for something like the Nasdaq 100 to really validate it as a bearish divergence, you need to break down through that swing low, which is around 9,500, which would be about another 5% below where we're at right now with the Nasdaq 100 fighting that key 10,000 level. So that'd be a bit of a sell-off to validate in this particular index. With other individual stocks, it's a little less to get back down to that swing low, but that's the idea. You'll also notice for the 50-day moving average that would line up pretty well, it looks like, with the that 9,500 level. So on any sort of pullback, if we do get sort of this follow through to the downside, that's certainly where I'd be looking for some, at the very least, short-term support for the Nasdaq 100. And a break below the 50-day, a break below 9,500 would validate this bearish divergence and suggest much further downside. While we have it, the S&P 500 does not have a bullish or bearish divergence at the moment because you've actually seen a lower low in price, right? So right now the S&P has had a short-term top around 3150 that's coming down from around 3230, 3240, which was the peak from the first week in June. The Nasdaq 100 has been going higher, along with a lot of technology names, again, the leadership names that have continued to outperform over the last couple of weeks. So my one chart for today is the Nasdaq 100 index, I think representing a lot of bearish divergences, suggesting there's certainly the potential for much further downside from current levels, and certainly limited upside. That's it for the one chart today from all the team here at Market Misbehavior. Wish you well, be safe, take care.